This is SFNet Presents In the Know with host Barry Bobrow, sponsored by Tiger Capital Group.
Hello and welcome to SFNet Presents In the Know. I'm your host, Barry Bobrow, Managing Director for Regions Business Capital. Through the In the Know podcast, I've been bringing a series of conversations with thought leaders on important topics impacting the secured lending and asset-based markets. Today, I've got a very special guest, someone who is extremely well known and more importantly, well liked in both the US and the UK markets. In fact, he's a legend in the UK ABL markets. Jeremy Harrison is currently Managing Director and Head of UK Asset-Based Lending for White Oak UK. White Oak, as I'm sure the listeners are aware, is a leading private credit firm with a significant investment in asset-based lending. Jeremy joined White Oak in 2025, but brings an extensive experience in the UK and European markets, and over a 35-plus year career has held senior positions within the asset-based businesses at ABN AMRO, Bank of America, Lloyds Bank, GMAC, and GE. Jeremy is a passionate advocate for asset-based lending in EMEA. He has been a driving force for the advancement of asset-based lending in the European markets and was part of the inaugural team that established SFNet Europe in 2014. In addition, he served on the boards for UK Finance and ACG UK. During his time with Lloyds, Jeremy spent quite a bit of time based in the United States, so he has a very unique familiarity with both the US and UK ABL markets, and that makes him the perfect person to talk about the similarities and differences between the markets and also help explain the opportunity that White Oak and others see by growing their UK business. That's what we're going to talk about today. But before we begin, I want to make the obligatory disclaimer. Statements and opinions of individuals on this podcast are their own, do not necessarily reflect the opinions of Regions, Secured Finance Network, or White Oak. Information provided should not be relied on or interpreted as accounting, financial planning, investment, legal, or tax advice, and references to websites or companies should not be construed as endorsements or recommendations. And you should consult an appropriate professional concerning your specific needs. One more important programming note. Thank you to Tiger Group for agreeing to become the sponsor of the podcast. We all value the work Tiger does in our industry, and now I value them even more for the support they're providing for In the Know. All right, Jeremy, we have all that behind us here. Welcome to the podcast. Really great to have you.
Thank you so much, Barry. You know, you're a great friend. I've known you for many years. When I first joined in the US, when I came from Lloyds, and you helped me very much and got me into some deals. I remember that so well. Thank you very much for having me.
You were a great participant in those days. It was great to have you, Jeremy. This podcast I think is going to get viewership, both in the UK EMEA market and also in the US. So just start with some basics here. Talk about the UK, I guess UK EMEA, but it's primarily UK ABL market. How big is it, and what do you think some of the key attributes are?
Yeah, I think in terms of size, unlike the US, which I'm always so jealous of, where you've got some great stats with Loan Connector, etc., we just don't, and Reuters, we don't have that. So we rely on UK finance and what we can do within SFNet and just general knowledge. I would estimate that the size of the market is something like 50 billion, so quite a lot smaller than the US market. Bear in mind, we're 65 million people, and we're one of 27 countries in Europe, or 28 countries in Europe, including the UK. So when I've looked at, okay, what size deals or what size book could I actually get within, whether it's White Oak or ABN AMRO, generally the market is just smaller. I think the largest deal that has been done in the UK is probably 500 million. So it's quite a lot smaller. But
Jeremy, when I think about it, the scale of the economy, I mean, in total, EMEA is bigger, but it really does operate as a series of different sub-markets. And so, in the US, we have large deals because we have such large companies that operate across the country.
Yeah.
In the UK, you just don't have the same size companies. And so the deals are just going to be smaller, right?
Yeah, you're totally right. I remember going back to when I was doing some spreading of some accounts and on a sheet of paper, because that's what you had to do when I first started my career. And I was looking at, it was Chrysler Corporation. And I thought, wow, this is a really big company. This is nearly as big as our country. then it is. That's the huge difference. We will have UK and sometimes European companies of size, but there are not that many, unlike the US, because the market, as you say, the market in the whole of Europe is probably similar size to the US, but 28 different countries and 28 probably different legal systems.
Yeah.
So that makes it difficult from an ABL perspective.
Another big difference, and I'd love you to talk about it a little bit, the banking system works differently. In the United States, even though there's been substantial consolidation, we're still north of 4,000 banks. In the UK, you have explain what the concept of the clearing banks is and how many banks are really relevant in your market.
So clearing bank, the reason it's called clearing is that they cleared checks. So when we cleared checks or cleared payments, probably even before checks, probably I'm just thinking exchange, bills of exchange and stuff like that. That's how it became clearing. You would literally take all the checks that were drawn on your bank to the, say, Lloyds, to Midland, as it was then, HSBC now, around Bank Station, where we all know quite well within London, and literally people would transport these checks drawn on each other, and that was the clearing system. And they would receive payment, or they wouldn't transfer it because they'd have to get payment maybe in gold at that time. It was that's how it developed. So you have 4 clearing banks: NatWest, RBS, who obviously previously the RBS, and then NatWest, and now NatWest again. Lloyds, Barclays, and HSBC, which I said was previously Midland. They owned Crocker at one stage, so some of the US viewers will remember that Crocker Bank. Then you had other entrants came into the market. You had US banks come in, Bank of America, JP Morgan, and PNC in our ABL market. So they're dominant, they are great players, and they brought.
It's an important point, though. I just want to come back to for people who are not familiar. Those are the 3 U.S. banks that really operate as full service asset-based lenders in the UK.
Yes.
Wells, B of A. Actually, it's 4. Wells, B of A, PNC, and then to a lesser extent JP Morgan. Would you agree?
Yes, and they're all important. PNC is a commercial finance provider rather than a full service international bank. Obviously, JP Morgan and Bank of America have investment banks. So I think the similarities are that the investment banks, when I was at BFA, was what we were trying to do there was we were trying to work with the investment bank and almost try and bring a UK European type structure, as you see in the US, with the large sponsors. But the market has just never evolved that way, because the clearing banks prefer revolving credit type facilities. And whilst they may not, to the outside world, they would say, well, we would prefer not to do RCFs. At the end of the day, it's still a dominant part of the UK market. So we see deals transfer from, we're working on at the minute at White Oak, from an RCF to an ABL type structure. So that's what you tend to see, but you just don't see the volume that you do in the US. And furthermore, you don't see the ABL tied up with a bond. It's quite rare. I've seen it on a few occasions in the UK
it's really amazing to me because we've been talking about this for many years. I'd come over and do conferences in the UK. And what drives the US ABL market significantly is the linkage to capital markets, whether it's sponsor or just corporate. You have high yield bonds, you have term loan B, and that revenue stream, that ancillary product stream, just has not become a main feature of the UK market, right?
Yeah, I so quite often think it's down to education. So one obviously in over the discussions we had over many years from time to time at various conferences, the market in the UK is quite dominated by advisors. So it's quite different to the US market. So the opportunities and deals that we get tend to come from the debt advisory firms. So it could be one of the big 4, PwC's, EY, others are allowed as well, or the boutique. So you could find Houlihan Lokey, they're present. and bed. So you've got these boutiques who also come up with deals. The challenge is, and this is my view, is that, and this was from time at B of A, when I was working quite closely with the investment banking groups, was that leverage or leverage facilities were the main approach. The main product or the main facility that investment banks wanted was leverage facilities, so RCFs, rather than an term loan, an A and B, etc., but rather than an ABL. What I tried to do both at Lloyds and in Bank of America was to try and get everyone to understand that actually an ABL is really good and why it was good. It is no longer the lender of last resort, what it was seen in the UK market. It is no longer that. It's capital efficient, makes a lot of sense for lots of companies. And I think once you get a sponsor to use it for the first time, they'll use it again. There are numerous sponsors who will always go to ABL now, which is a step forward over the last 15 years.
Yeah, it's an interesting point, though. I always was struck by, and look, the advisor community, they're excellent professionals. They're really good at what they do, but it does seem to be fundamentally different in the role that they play as an intermediary between borrowers and lenders in the UK versus in the US.
Yeah. So yes, I'd say we have brokers as well. So the smaller type of deal, and that's still important for us at White Oak. We'll still do a deal of a couple of million upwards. So some of those are introduced by brokers. So the broker, insurance broker or specialist smaller boutique firms, so they introduce us business, and in return they get commission, and it's normally life of deal. And then you get to a certain size, it just varies per deal, per introducer, and then it becomes a debt advised piece. As you know, I spent a few months at Alvarez and Marcel in their debt advisory team.
I forgot to mention that. You're right.
I really enjoyed that, and it gave me a really good insight to the market. And what a tough job it actually is for a debt advisor, because you've got in the opportunity. It could have come in from your M&A team, corporate finance team, or some other introductory source, and then you're trying to place that deal or that opportunity out in the open market. You've got to have a Rolodex of maybe 200 different types of lenders. The lending community, much like in the US, has massively changed with private credit funds, with mezz funds, with all the other different funds, with as well as lenders, as well as international lenders.
Yeah, Jeremy, I want to take a quick digression here because we talked about the size of the market and the size of the borrowers, but the legal construct is also very different, and it varies by jurisdiction. So we could spend all day on this, but I'd like to just kind of lay out what it means as a lender to have to deal with cross-border transactions within the European market.
Yeah, sure. So the UK English law is very lender friendly, and it works. It is tried and tested, and you can lend on all assets. So the asset-based lending concept works really well in the UK. The further you drift from the UK, whether it's east or south, it becomes more difficult. I know that a lot of people refer to it as the beer drinking and the wine drinking countries, but you can now get champagne and wine in my locality. So it's kind of that's going to get a bit mystified, I think. But in all seriousness, obviously, working for a Dutch bank as I did, Netherlands is a very good market. It's very safe for lending. Then Germany has a few things you have to think about. You've got the Nordics, and you've got Belgium as well. And then when you start to go in drift into Italy, Spain, and to a degree France. France is very good for factoring, for invoice finance, but other forms of finance are quite other assets are quite a bit more difficult. So the general view is you can do receivables in any country in Europe, and there are 27. And when other assets, as you go east and south, it becomes more difficult. But you can do all assets here, all assets in Ireland. We were in Ireland earlier this week looking at a couple of transactions. I think that's actually quite a good opportunity. And the Netherlands is as well.
Right, but the Netherlands, every sub-economy is going to be smaller, so the size of the transactions is by definition smaller. What would you say is a typical transaction size that you're seeing now at White Oak or previously at ABN?
Yeah, so it can be anything from the average size, I would say, is about 35 to 50 million sterling or euros. That's the average size deal. So that would compute to a 300, 400 million revenue business. Sometimes they're larger, sometimes you do get larger. Plant machinery type deals can be larger than that. But in all intents and purposes, that is the size of the facility. Each facility is of that order. I suppose one of the things that is happening in the UK and Europe is the carve out that is available for receivables. So providing they're done off balance sheet within the leverage facility is normally a carve out for receivables purchase type facilities. And they generally have a cap maybe up to 50, 60 million or something like that.
From an evolutionary standpoint, you started going there, but I just want to drill down. There has been an acceleration of ABL, I would say, in the last 10, 15 years as a more of a mainstream financing tool in the UK. Walk through what you think some of the key developments have been.
So I think the key developments are that it's probably the same as what's happened in the US. So most people cut their teeth within one of the clearing banks. I think our market is relatively incestuous in that a number of us who are in the market still and have been, we've worked together in some form at maybe Lloyds, maybe NatWest, maybe Barclays, or maybe HSBC. So then you go off and you could maybe join an American bank, or you join an international way like ABN or something like that. And then what's happened is that then you've maybe thought, oh, actually, I could do this. I could set my own business up. So then you've had other people set their own businesses, Procura, Centric. They were all set up by people who were in the within some other organization. So it's somewhat similar to the way PE works with setting their own funds up as well. So that has meant that the market has expanded. The general progression is that whilst the number of ABL deals from a UK finance perspective has fallen, i.e. the number, the actual size has grown. So you've seen less smaller transactions and less number of companies, but maybe the quality is improved. That is the general direction. And then that's probably because you've got the evolution of AI and fintech running the very small facilities, which just are not capital efficient, not cost efficient. A number of the clearers have pulled out of doing very small asset-based facilities, maybe less than 500,000. So they're quite small. These are quite small. So you've seen this tendency.
One of the things that always struck me as a big market difference was that in the US, all of the large banks not only have asset-based businesses, but are looking to integrate them and provide transition when companies, maybe change their credit profile, or maybe it's just a more flexible financing, but it becomes more of a product inside of a large integrated financial institution. It doesn't seem like the clearers have really embraced that.
Yeah, that's right. So I think my time back at Lloyds, we were a separate subsidiary. And then it did, and it was very successful. It was I think one of the real market. It helped the market grow a lot in the early days of ABL in the UK. What then happened was that over time, or about the time I left it become a bank product, and actually then it kind of lost its way. It didn't have quite the entrepreneurial feel to it, so it became lost in a bank product. And at various stages, there's been growth. It's currently on a growth trajectory now, with one of my good friends is now head of it, which is great because the market needs players like that able to write decent checks,
Mhm.
which makes the market grow. Plus, as we know, deals move within departments within banks or categories. Corporate
Yeah,
banking comes to maybe an ABL structure.
yeah. But now you're working for a non-bank.
Yes.
I think,
Yeah.
well, you
Yeah.
did work for GE at one point, which was just a large bank, but
Yeah.
non-depository.
Okay. Yeah.
Uh, is that a movement? Are there more non-bank asset-based lenders setting up business in the UK?
Yeah, I think over the last 10 years, and again, I was able to validate that whilst at A&M, there has been definitely a tendency for non-banks and more a bit more like private credit funds. I wouldn't put us as a private credit fund. I'd put us as a non-bank ABL. But some of private credit has clearly exploded in the UK and EMEA just as much as it did in the US. So I think people have looked at the asset category and said, actually, this is really interesting for us. And it's another way of lending. But I think there's a huge difference between what some lenders within that segment can do, i.e., some can revolve like us, true asset-based lenders, but others can't. So you had there's opportunity there. When I got approached to take on this role, one of my one of the key things I wanted to understand was our price point, and my time at A&M really helped me understand what the market opportunity was.
Sure. And do you think that what would be the typical pricing differential between a bank and a non-bank ABL lender in your market today?
So I would say that it's we see activity at sub 2% over from banks. Banks can take ancillary income as well. And I think when it's a non-bank, bear in mind we might be paying something similar for our funding lines already. It's going to probably be double that at least. But there are still
Hmm.
other players in our market who are doing still deals more than that. And then there are mezz funders as well, and they start at maybe early teens. So I think there is such a variety now of lending institutions that virtually any deal can be done, if dare I
Hmm.
say.
There's an emerging topic in the EMEA, which is that the EU is putting forth some new rules
Yeah.
on lending within the EU countries. Why don't you talk about that a little bit, because it's a hot topic for any bank that's not operating inside. Well, actually, it's a hot topic for anybody who wants to make loans, not just asset based within the EU.
Yes. Yeah. No. 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 You're right. You're right. Capital Requirements Directive V6 or V1. So
Yeah.
began in 2026, and it is beginning to be in place January 2026. So if you're an EU country, you should have passed law that this is coming. So if you're an EU, obviously the UK isn't, so we don't have to do that. From 11th of January next year, the main rules apply. And what they are is that basically it's a third party country bank requirement. So you cannot provide core banking services. As with all regulations, there's going to be areas that the lawyers can help with and structure deals. But basically, to offer banking services within, if you're a non-European bank, you have got to have an EU authorized branch or an EU subsidiary in that country. Now,
So the way I look at this, it's a big question for banks like mine.
yes,
The impact, we don't operate over there, but we do participate in cross-border transactions where we're playing the role of a lender as part of a broader syndicated deal. What do you think is going to happen here?
so there's two things. I brought it. There's a panel I'm doing in a couple of weeks' time at SFNet Amsterdam, and it's quite interesting. And I've got two European banks on the panel, and I said, should we talk about this? And they looked at me and say, well, it doesn't affect us because we're European. We're European banks. That made me smile. I'm thinking, from their perspective, they're thinking, well, it doesn't affect us. But the point, what you said, it does affect. But equally, I was talking to a lawyer about this, and they told me that there will be ways around this, maybe through an SPV or other method. Bear in mind, if you've got a large US company that you've got some subsidiaries in Europe and you want to lend to them, perhaps by lending through one country, maybe we've always talked about the Netherlands is a good country to lend through, or Ireland. Maybe that's a potential solution here. I think what the EU is trying to do is it's anti-competitive in a way, isn't it? But that is clearly it's about shoring up their own the banking system. Maybe what they're trying to do is making sure that if you operate and lend within that country, that you are there.
Sure.
From a risk perspective, I remember at B of A, lending to some of these countries, if you're there, is much better anyway. But I'm not saying you want to set up in 27 different countries, but maybe a branch in Netherlands or Germany is the right way.
Yeah, but I think the unexpected consequence could be on companies, like you say, large multinationals that want to access lending in different jurisdictions. If a bank group that includes banks like mine may have to find an exemption or may not be able to participate if depending on how the regulations, which could actually restrict the flow of liquidity.
Yeah. Like you said, it's an unintended consequence, isn't it? So there may well be some adjustments or some other way around it. Well, not around it, but some other way to actually facilitate what you need to do.
Yeah. It's an emerging topic. Well, let's, Jeremy, I wanted I'm going to leverage your years of experience in the market and ask you a couple of lightning round questions here. What's the biggest structural mistake that you see banks, lenders make with respect to UK EMEA lending?
I think they just don't understand that you've got 27 different countries. So in sometimes you might get a structure that just says, well, it's okay. We've got cross guarantees. We haven't got the local security. Currently, going in now to I've inherited a book of transactions, and I've had to not relearn, but really get into the weeds on debentures, on how to deal with administration and those types of things. The UK, of course, is a really creditor-friendly place, but some of the other countries are not, and some of the banks that I've worked for have avoided certain countries because of issues in the past. There is a little bit of alignment in certain countries, but it's still local rules, local regulations prevail, which can be a little bit scary sometimes.
So you're sort of making a brazen plug for all of your attorney friends in the UK market to help advise us on jurisdictional differences.
Yeah, there are.
Yeah. What country? I mean, as you point out, the rules change, the laws change. There's evolution. What's a country or two that you think we should be watching closely, either positively or negatively?
Yeah, I think we're all slightly concerned about France. But having said that, at ABN we did an all inventory deal in France. So sometimes you can get comfortable with it. And the French market is quite cheap as well, so the pricing is very low, and I think we all wonder how they get to the pricing they do. But most people, including us, we can't really get comfortable with lending in France. Countries that interesting, and this again, perhaps this attunes to SFNet as well. So where are we having a couple of events throughout this year? And the answer is Eastern Europe. Eastern Europe that was, Poland is a big manufacturing base now, so that must be interesting for asset-based lenders. Of course we can do receivables, but what about the other assets? A lot of the time that we're looking maybe at a German company, a UK company, it's got subsidiaries there that is quite important, particularly important with perhaps a move over time to nearshoring. And then the Czech Republic and countries like Romania to a degree as well. So, I think those are the countries that are interesting. Italy, we really struggle with. As soon as I have every place I've worked, the terms 180 days, 240 days just scare us to bits. But you see clients now establishing there. It's probably 70 million people. It's got a big manufacturing base, important, but still difficult from a lending perspective.
As you look back on, I mean, we all live and breathe on deals. You have a favorite deal that you did or didn't do you'd want to highlight for us?
Yeah. What I love about my job is the variety of the deals that you see, that you get involved with, the management teams. I think one of my best deals was a company that processed meat and put them into the supermarket. It was one of the first MBOs I did in probably about 2006. Not huge, but 15 to 20 million sterling. And it was just and it was a buyout from a big PLC, so an MBO, three guys, and I just got to know them really well, and I just enjoyed it. So, and I do love management teams. You know, even this week, as I said, we went to Ireland to go and look at a deal that we're just about to close, and again, nice people, great business. You know, really, you know, they're so excited by their business and they've grown their business. I love that, and I could count many more.
Jeremy, tell me about White Oak. You made the move last year. What attracted you, and what do you think the business opportunity is for you under White Oak in the UK?
Yeah, great. So yeah, I think what attracted me was the people. I think that's really important. There's some really good quality people who really know the industry well. You know, we are non-bank ABL, so we know we won't play in bank deals per se, but it's still a great deal of opportunity for us. What attracted me was that we've got a base to grow. And as I've dug more into the business, you know, we've got you know, a nice portfolio of clients in the 2 million sterling to maybe 15 million, and that's a part that we want to grow. So they will be sole lender, you know, ABL deals. But I think we've teamed up with UK Export Finance. So basically, we can offer finance further to other countries, to export countries from the UK, and that's an important step. We're the only non-bank to have that ability, and we've got great deal flow coming from that. And then I think because again, we're slightly more expensive than a bank deal would be. So as a consequence of that, we know that we've got to offer more than just regular ABL, so we can go and add cash flows to the top as well. And I think that gives us a nice extra that we can then bring in some nice deals. And we have brought in some nice deals since I've been there, and some of them were in process before. We completed a nice US UK deal recently, which is great step in the right direction. And I'm certainly trying to get out there so that people can understand what we can do. So something that some people may not know is we have 175 employees, and 150 of those will be working in our SME, which is small and medium enterprises, generally up to 45 million revenue. That's the definition from the British Business Bank. So we're doing short-term facilities, asset finance and term loans, and we're very good at it. And we've been doing it for 40 years. It's our 40th anniversary this year. So
We would call that factoring in the United States, right?
It's kind of the old way of doing non-debenture, so debenture lending. So you're not doing, yeah, it's. But then what happens is that some of those grow and they become and we start to talk to them within the asset-based lending team, and we've had some nice deals that route. Equally, we've got the ability to cross-sell back into that business as well. In terms of growth, we've got significant growth aspirations in the UK and Europe. We can lend in Ireland, we can lend US, Canada, which most people know already, and also Australia.
Well, my advice for people listening is if you want to learn more about the UK market, or you know, start with Jeremy. He not only knows everybody, but he knows pretty much everything, and has a long history. So thanks for sharing with us today, and look forward to seeing you in the not too distant future. You do come back and forth. So maybe I'll see you in the UK next time.
Yeah, well, I certainly enjoyed when I came over to Charlotte and us having dinner together. It was really nice. Thank you very much, Barry. But you're a great advocate for ABL, always have, and thank you for letting me participate on this.